Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, man, thanks for having me.
Tim, to me, it's starting to smell a bit like a recession. Bayer announcing 12,000 job cuts, GM 10,000 job cuts, Bombardier 5,000 layoffs. Is this the kind of thing that we see going into a recession, perhaps causing one because so many people are out of work?
Well, I think it's a sign of the times for sure. I have a top out list. I've been looking at, been talking about this long-term, top in the making, and the automotive sector has definitely been one of the leaders there. I think the longer term top has been in place. Like I said, it was one of the leaders. There's also some leading economic indicators that I look at, not routinely, but just kind of keep an eye on. And since we're talking, I just pulled this up, and it is at like 14 month low, so it's been rolling over. And the fact that, that leading economic indicator has turned down in conjunction with what looks like these leading sectors and various averages like we talked about. It looks like the Canadian market's peaked out. It looks like some of the foreign markets have peaked out. The Dow Jones World, those leaders, that is a serious warning that this top that we've been watching and talking about developing is coming to pass. And I think it's definitely a sign of the times.
Are we in a structured roll down where we have 2 days up and then 3 days down on the market?
Well, I think, yes, for now. We moved down into, in my world, an intermediate degree low in October, and we've seen a bounce out of that low. As we moved into that low in October, we saw enough technical damage in some indexes and sectors to say, yeah, the higher degree 4-year cycle top should be in place. In others, we have not. It's not yet complete. And we've talked about how, the Dow Jones Industrial Average, the S&P have been providing cover for this overall setup. And I think that's exactly what we're seeing. We've had this bounce out of the October low. It's still lingering. And, now the test at hand is, okay, some of the longer term stuff's broken and it's trying to break on, some of the mainstream averages. But then short term, we have this bounce. So you have this little tug of war at this technical juncture. Can the can get kicked down the road again, or is this the point where it starts to crack? And that's kind of where we're at. But overall, I think we have progressed to the point where it's just a matter of time. It doesn't matter. The setup is definitely in hand. I think I may have talked about this last time, but we've been watching. This is beyond, the old term, the turning of a battleship. This has been beyond that. I mean, it's been a mammoth turn and very, very slow process. But I think what is happening is that it is a much potentially, I should say, a much more significant turn than I even thought at first. And the reason I say that is that there is a long-term, I have some long-term economic data going back to 1800, and you can clearly see there's a number of, there's like 6 economic cycles within, that data's, back to 1800 again, but we're turning down now out of this, what I believe, is the 6th cycle within that data set. And I think it's a turn of a much higher degree. And I think that it has been this entire cycle, whereas many of the other cycles, obviously, there was an economy under them. They were based on, an expanding economy, real jobs, the Industrial Revolution, so on and so forth, substance is what I'm trying to say. There, even in the 80s, you had the .com, going into the 2000s, we had the telecom, industry. There was substance there. There was a real economy. But this time, it's been based on monetary policy. It's been based, funny money. And so that doesn't negate the fact that, yes, price has done what price has done, but what I'm saying is there's no substance behind it. It's hollow. It's just been on the back of monetary policy. So I think that this is, like I said, it's been a very slow process in the making, but I think we're getting very close. And, when it turns, I think it has the potential to, be the pricking of even, a larger bubble than possibly imagined.
Well, so many corporations use the Trump tax breaks to buy back their own shares. Several decades ago, that would have been considered stock manipulation. Now that's legal. Should it be stopped and not allowed again so we get a real price?
Well, I think the corporation, I don't know about that. I mean, corporations, I suppose, should be free to buy back their own stock if they want to. I mean, that's part of the free market. But as far as on the manipulation note, that's how we got here. That's what I'm saying. That's what this entire, I hate to keep using the words, I don't want to overuse it, but it is what it is. I mean, it is a bubble, and it has been based on monetary policy, which is designed to manipulate the market. I mean, Greenspan back whenever the speech was, back in 2001, 2, 3, whatever it was, he openly talked about, no, it wasn't Greenspan. I'm having a brain cramp. It was Bernanke, but the Bernanke speech, the helicopter speech, about, blatantly fighting the deflation. And so that's not conspiracy. It's real. I mean, that's what this entire advance and bubble has been founded on. So on another point, what I want to add about this manipulation is that I have noticed, I've talked to a few other technicians, and I talked to a friend just this morning about it, and he said he's seeing the same thing. As this market gets to some timely technical, levels, let's say, or positions, setups, whatever you want to call it, we have begun to notice that, the news, the tweets, the announcements, oh, we got to deal with China, oh, whatever. And it's just, it's very timely now how the news events are occurring at these technical junctures, right when the market, right when it needs to be turned or saved. And so, my buddy was telling me that he's even seeing some people, tweeting about that, that others are noticing that. So, yeah, they're trying to manipulate and save it as long as they can. And like I said, that's where we're at with the battle. Can the can be kicked down the road again, as they say, or, there's this longer term stuff that, is slowly falling into place. Does it finally give way to that?
Mike, Mish Shedlock has a theory that perhaps if there is a recession, it won't cost a lot of jobs because it took companies so long and they had to work so hard to get the employees they have. But I think companies also have very short memories, and if the way they reacted to a recession last time was to let people go, they'll do it again.
Well, I don't have a crystal ball on that, but I would think that, yes, they would do it again. I think that when it gets down to it, the company's going to do what they have to do to protect and save their bottom line. So, I definitely think that with this downturn, we're going to see people hurt in many ways. Last time, I mean, the little neighborhood I lived in at the time, I saw there were 7 people, lost their houses, in that downturn, just in that one little small neighborhood. So I think that sort of thing, job losses, the pensions, I've talked about that before. I think, people think that just because they have a pension, they have no exposure to the market. I'm telling you, this is a much, much, much larger, risk with this downturn than I think most people see and understand.
We'll have more with Tim Cyclesman Wood right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what kind of a cycle is oil in? It looks like a 2-cycle engine just about on its bottom downstroke.
Yeah, and, that's kind of a good point. We talked about how, as oil hung on, it bumped along the ceiling, if you would. It first tried to peak, and I'm not looking at the chart, in May, and then we got another little push. I think it made a slightly higher high again in like July, and then it tried to roll over, and then nope, it held on, and we got one more little push up into the first part of October, and then it cracked, and every one of those little pushes, as you recall, I know it sounded like a broken record, and I said nope, it's the 3-year top, We're trying to make the 3-year top. Well, that was true. And obviously all of a sudden we look around and bingo, oil is down 12, 14-month lows, whatever it is. And yeah, we're getting a little short-term bounce here, but it should be counter trend. And I think there's more downside. And so I guess the point I'm trying to make there is that all throughout the year, when I said, we're trying to make this top, I mean, I saw what I saw, and it was the top. You can't control the fact that, it held on. And that's the same thing. The point I'm really trying to make with that comment is it's the same thing with this equity deal. Yes, it's been beyond, like I said, the turning of the battleship with this setup, but it is setting up. It is happening. And we're going to, one day here be talking and look and turn around and you go, what happened? It's going to be like the oil chart. And, the cycle is going to bite, is what I'm saying. The same thing with the dollar. We talked about the bottoming of the dollar, and, look at it now. In the short term, yeah, we're at, I think some sort of even short and possibly even an intermediate degree top, but overall, higher dollar. Just like the cycle suggests. So my point is that while some of these things can take longer, for whatever reason, like I said, due to manipulation, phony news, whatever the underlying factors are, we don't all the way know all that, but things can take longer than you anticipate, but the cycles will have their way. You can extend them, you can distort them, but in the end, they're going to express themselves. And it's the same thing with equities.
We'll be back with Tim Wood right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Wood. Tim, the Fed now has said it may only have another 2 interest rate hikes before they put the brakes to it. What does that do to the U.S. dollar, and what does it do to precious metals?
Well, I don't think it does anything. I think it's just more of the jawboning to try to, to try to manipulate the decline with the news. I don't think it matters. I really just, I don't think it matters. And an example of that, I was talking to a friend last night, and he was talking about this rally that we saw yesterday in the industrials and how it was tied to the some Fed announcement. I didn't see it, so I'm not exactly sure, what was said, but it's some Fed speech announcement, whatever the case was. And so I looked at one of the foreign markets, is a Russian market, and, they're 9-10 hours ahead of us, something like that. And so the market had the exact same structure, exact same cyclical structure, and it rallied hard before that news was ever even announced. It had nothing to do with the news, but the price action was the same. And so what I'm saying is, when you look at all these markets through my eyes, through the cyclical ebb and flow, many of them, the like markets move to a similar structure, or similar rhythm, and therefore the structure is similar. And so I said that to say this, is the news, I mean, it's like, what comes first, the chicken or the egg? Something happens and they go, oh, it's because of this. Well, is it? Or is it because the structure was already there and then the news kind of, is just the excuse? Yeah,
conveniently fit it.
Exactly. So I don't think in the end, I mean, it doesn't really matter, because this higher degree turning process is at hand. I mean, we said that we were going to see a bottoming of the dollar. Check. We said we were going to see the topping of commodities. Took a while. Check. And I'm saying now, we have seen the 4-year cycle top and the rolling over in many, many, many of the equity indexes and averages and sectors and so forth. Check. Have the industrials in the U.S. markets gotten there yet? No, but it's in the process. And when it does, like I said, we'll look back and go, check, because they will play catch up, just like crude oil.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.